Cool. EMX Royalty Corporation. We've been accumulating royalties globally for 20 years and have exposure to 170 royalties touching nearly 5 million acres of mineral rights. And within that, there are some key assets that are greatly driving value, which I'm sure you'd like to talk about, Matt.
I do. I love cash. So do you. Right. Okay. We've talked in the past about the kind of makeup and structure of the company, but the kind of, I guess the kind of missing bit in a meaningful way was, revenue coming in large chunks. It's now happening with Timok and Caserones. You've been taking that opportunity to use that cash positive in terms of cleaning up the balance sheet. So why don't you kind of talk through what the logic has been up until now, and let's get into what you're going to do.
So let's just first review how we got here, right? We've been accumulating royalties. We've always been the value player on the block, putting together this portfolio globally. You mentioned Caserones, you mentioned Timok, both key assets within the portfolio that have potential over their life to pay $1 billion each.
And then,
but then there's also the Leeville royalty, which is paying very nicely on the Carlin Trend, operated by Barrick. The Gediktepe mine, which right now is setting records for us on a monthly basis. We've had months that paid over $1 million. That's very nice for us. But this all speaks to how we're coming to that tipping point. We've crossed the tipping point now where we're demonstrably positive cash flow. That gives us an opportunity to pay down debt. We will refinance our debt here within a month or two, probably at the end of this month.
Is that Sprott?
It's currently with Sprott. It's
right.
currently $34 million US,
right,
and is at a 7% coupon rate. I'm going to do something that the market's going to like with the refinance of that.
Okay.
I can't say what it is yet, but it'll be announced within a month or so.
Okay.
Most people are expecting that forthcoming.
Right, and then obviously with share buyback, we can call something else.
Buy back a few shares, you bet, yeah.
But up to like a lot, right?
So, I hope so over time. It's share price dependent. Obviously we're more aggressive at lower prices, less aggressive at higher prices. We have an algorithm with National Bank, that are executing.
But if you set a limit, you set a top limit.
Yes, and no, I'm not going to tell you what that top limit is. No, there's an algorithm. Actually, lower the share price, the more the bid is.
Mm-hmm. Okay.
And we think that that's more astute than paying a dividend.
Right. And so, when you've got cash, it gives you the option to do multiple things, whatever. And I'm always intrigued in terms of the plan. So share buyback, debt restructuring or refinancing, always eminently sensible.
Yeah.
Bringing new people on the board, eminently sensible. As long as you've got an idea of what you're structuring, what the future that you want looks like. So what is the plan? What is the shape of the company going forward?
So quite simply, it's executing the exact same business model that we have for decades. And that's astute allocation of capital across the space, executing royalty generation, continue to acquire early stage assets, add value by demonstrating geological potential, selling those off in exchange for royalties and other cash payments, which we've done nicely for many years now. And then occasionally picking off a royalty to purchase when we see one at a fair price. But we always need to think about our cost of capital.
Yeah.
We need to think about that debt that's on the books and allocate things appropriately in an even-keeled manner across those opportunities.
Right. Look, and if I look at your share price over the past few years, it's kind of held up well, but markets were doing it a bit. Thing now with gold, there's a question I'm asking a lot. I think certainly of recent times is in a high-priced gold environment, producers are the main beneficiaries, so are royalty companies. And again, come back to that question of it's kind of almost free money in a way, additional free money for you when it's $300 higher than it was, pre-Christmas. So you've got an idea of how you treat that. Do you want to kind of build up a kind of buffer? Because it's been an unusual thing. Most companies haven't had spare cash lying around to do anything. Maybe it's like scrabbling around just to survive. What do you do over and above what you thought you might be able to do once these like Timok and Caserones, etc., came on tap?
That is pay down some debt, do some share buybacks.
But were you going to do this anyway?
We were going to do that anyways. But
right.
Carefully looking at new opportunities. If we have more arrows in the quiver, that just expands the opportunities that we're able to look at. But with the same attitude we've always had, we're the value players. We're looking for astute allocation of capital opportunities.
But do you mind debt on the book? Do you want to pay that off quicker, or is it actually good to amortize that?
I'm absolutely fine with some leverage.
Right.
And that leverage has been a key tool for us to build the mass within the portfolio. We use those monies to buy Caserones. Caserones have been performing very nicely. Cash flow to us $10.4 million last year. Lundin's now the operator. They're putting a lot of money into exploration. We see huge discovery optionality within that royalty because the royalty goes far beyond the Caserones mine itself within a belt of exceptionally well-endowed copper mineralization. So we're very pleased with that acquisition. And having that debt on the books is entirely manageable given our cash flow today and our cash flow looking forward.
So you make an interesting point there with regards to, it's not just you that's a beneficiary, but the producers themselves are beneficiary with the additional cash. And we want to see more exploration. We'd love to see more exploration from these majors, and and I think that'd be great for the sector. It's great for you, but it's also great for the sector if we see more of that, not just in terms of existing projects, but elsewhere. Because we saw that recently BHP failed bids for Anglo, but it showed us that big companies just want to buy, merger of equals and all that stuff, rather than actually get after proper exploration. The sector is crying out for capital for proper exploration. It's not happening. Do you think this price spike will help the sector across the board?
Well, if you look big picture, Matt, the globe consumes more copper every year. That copper needs to come from somewhere. The most likely place for it to come from is from brownfields exploration, in addition to greenfield exploration. The area around Caserones would be an ideal example. Timok will be an ideal example. These companies need to put money into developing new resources to meet the demand for copper that we see forthcoming across the world. And there's the saying that the cure for low prices is low prices, because people aren't investing in new mine development, et cetera. The next thing you know, we're in a tight spot. We've seen that in the copper space. I believe that's likely to continue. Where the price of copper will go is hard to predict, but it's going to be higher than it is today.
Okay, so you think that where we've been has been a good thing for the sector. The way that companies behave has got to change.
The sector is going to demand substantial new capital in order to meet the global demand for copper.
Right, but what we've seen is big funds, in terms of the UK, 40 billion down to 12 billion. North America, similar sort of, or certainly Canada, certainly decrease in investment in the space because of the way the sector has behaved in terms of, perhaps not being as straightforward and honest as they could have been. So funds are saying, well, forget this, I'm off to tech, I'm off elsewhere. That's what I'm trying to say. What do we need to do? What do we need to see from the sector as a whole, and in terms of its behavior, for generalists to come into the space?
That's an interesting question. Yeah, well, I think what generalists need to see, of course, many of them are momentum players, so they want to see movement in the stock prices, then they'll pile on.
Yeah.
Right. But the astute value players, they're going to say, we want to see the mining industry have strong return on invested capital.
Yeah.
And if you ask Warren Buffett, he would say he just hasn't seen that in the mining business.
Right? For a long time.
So the majors need to be very careful about their capital allocation. They need to demonstrate that they're getting a strong return on capital. That'll bring in the value players, and then the momentum players will follow them.
Right. Okay. And for you going forward, you've got a great portfolio already, and I know you kind of got the long tail stuff in the background in terms of prospect generation and
that deep portfolio optionality.
Absolutely, absolutely, and also vending out some of these royalty these plays as well, exchange for royalties. How else can you kind of build up the kind of scale here? Because, like I say, you've been through a phase now where perhaps it's great on growth, market cap is great, but I make money with my share price goes up. You've had an uptick recently because of the gold price, but how do you affect the ability of the company story to generate a kind of a larger share price? So justify it.
A couple of different key ways, man. That's a great question. What are the catalysts, right? And some of that's just going to come from the fact that we have a fat pyramid. So we have those producing assets that we've specifically targeted to put into the top of the pyramid that are cash flowing us, giving us record cash flow. But we also have an immense base of pyramid that's all being explored with other people's money, creating that discovery optionality. So you're going to see things like Viscaria coming up into production. You're going to see the Peak discovery by South 32 in Arizona, that key discovery within the portfolio. See that come up the pyramid over time. So some of that's going to come from within the existing portfolio, but then we will continue to add to that, building the basing pyramid, but also looking for acquisitions that come in mid or top of pyramid as well, which is more likely given the fact that we have stronger cash flow today.
So the pace at which the growth will come is, how would you describe it?
I would say that it'd be incrementally larger over time.
Right. Okay. No, I think it's
no big paradigm shift.
well, and I think it's really important to point out, because otherwise you kind of attract the wrong sort of people onto the register in a way. Do you know what I mean? And talking of which, in terms of the institutional kind of components, see, where are you at now as a percentage of the register?
So not super high.
Right.
Yeah.
So that's the question: is how do we move?
It's interesting.
Do we want to move it?
Well, I think that the people that should be buying this stock right now are family offices and small and medium-sized funds.
Right.
Those are the folks that should be owning EMX right now, understand the business model, and see where we're headed. Where we've had the past support are from retail investors and major institutions such as Newmont Mining Corporation. Franco-Nevada is a shareholder. Barrick has been a shareholder in the past. The IFC has been a shareholder. It's got interesting two different groups. Major mining institutions and Ma and Pa have been our supporters from the beginning. That big middle sector right there, the family offices and small and medium-sized hedge funds, those are the kind of folks that, if they're astute, are watching us and coming in, and that's where we should target our investor relations.
Okay. And then with regards to indices, I mean, how important are they to you? And how do you?
Yeah, those become a self-fulfilling prophecy, and our liquidity has been increasing.
Yeah.
So we should be a candidate to be added to an index in the near future.
Okay. Good. Dave, good to see you.
Yeah.
Keep doing what you do.
Thanks a lot, man. Appreciate it.